as you watch, as the events have unfolded, and even the sort of confidence that you're seeing in the USDC, what are your biggest takeaways from what's been happening over the last 24 hours?
Yeah, the biggest takeaways is that Fed has made whole on its social contract that, in fact, US dollar can be a reliable means of measuring value and transacting. And it's basically now a train wreck that didn't happen, that value didn't get lost, deals can still happen, and innovation can still continue. We still are invited. Go ahead.
Well, I was going to say, we saw from Gary Tan, the CEO of Y Combinator, he actually tweeted calling this SVB fallout what he called an extinction-level event for startups. Now, this was before the government intervened, but where should the responsibility lie in really getting into this position in the first place?
Yeah, I think you have a point there. As users, as venture capitalists, we're expected to be the clever kids, right? Maybe we should have done more due diligence before we put all of our fund and startup companies capital in SVB. And we're in an evolutionary phase. Eventually, we will have on-chain records of immutable transactions, of auditable transactions, that we can see the history of all asset movements, but we're not there yet. So as we are midwives to that change, we end up having to use the legacy financial infrastructure at times. And this was one such crisis born out of that.
Because it really does show that sort of spillover. You have this decentralized banking and things with crypto itself, but then the companies that are actually supporting them still relying on the traditional banking system. But I mean, as we look at some of the crypto prices today, pretty much all of them in the green. We see Bitcoin up about more than 17% on the day. Is there a correlation then between the fallout that we're seeing with SVB and Signature Bank and what we can expect with crypto prices, given how they're reacting?
Yeah, I think the general sentiment is a function of on Friday, on Saturday, a part of Sunday, we didn't know, hey, are the money deposits in one of the top 20 financial institutions in the US safe? Will we be able to get back to business as usual? And that kind of shock invites people to consider other alternatives. And ultimately, on-chain solutions give us greater certainty that our assets will be there and we'll have the ability to command control over them. And it speaks volumes that market is picking up on the value proposition of cryptocurrencies and showing a buy signal.
So do you think that this shows that obviously a lot of people looking at this decentralized banking, does it really perhaps validate it somewhat once we've seen how subject some of these banks can be if they don't have the proper oversight when it comes to being overly exposed in one specific sector?
Yes, it does validate the value proposition of on-chain transactions and the ability to have a measure of value, a unit of account, and ability to transact basically without interruption, without having to rely on third parties that might go out of business, that might lead to seizures, that might lead to confiscations of different sorts.
So then, Sam, how would you compare the credibility of what we're seeing with stablecoins versus crypto?
Yeah, so stablecoin prices and the temporary depegs we've seen are a function of how a live market reflected in loss of value in stablecoins, the possible loss in bank stored assets. So the narrative is the stablecoin is backed by the dollars in a bank deposit, and therefore in the case where there was scrutiny and possibility of losing assets stored in a bank, so did the market price of the stablecoins reflected that. In the case of native crypto, look, I've invested in Bitcoin in 2013 and Ethereum 2015. So to me, it's obvious that these immutable, opt-in, free to use by anyone kinds of systems are far superior to the historical legacy systems we have used. And this is a testament to that.